For those that don't know me, my name is Christian Narvaez. I am the founder of Rayo Capital. We're a pre-seed fund in the digital asset space. We have a global mandate, but with a strong emphasis on emerging markets, specifically Latin America. And to kick things off, we'd love for everyone maybe go down the road to speak a little bit about their name, who they are, where they come from, and what they're doing today.
Great, thank you, Christian. So my name is Joe Naggar. I'm CEO and CIO of Republic Digital, liquid digital focused trading fund going on our third year.
Awesome. Thanks, Christian. I'm Liam, founder and CEO of Spaceport, and we're the operators of Cultura, which is going to be the first fully U.S. regulated chain dedicated for tokenizing human creativity and IP.
Amazing. Matt Wright, co-founder and CEO of Gaia. We're building decentralized AI inference, essentially enabling folks to take open source large language models, their own knowledge base, and create their own AI, APIs to serve to AI agents, AI apps, with censorship resistant sovereign AI. And obviously, this is happening alongside Digital Asset Summit. A lot of, I would say, corporates, financial institutions are coming to not only just explore their strategies and how to sort of engage in crypto, but also I think it's a good opportunity to maybe elaborate a little bit more on how is this regulatory environment maybe impacting how you invest and or operate as founders. Want to kick it off?
Sure. So, I mean, we're just looking for, the best opportunities and, kind of any market, equity markets, public equity markets, tokens, sort of secondaries, private equity. And what I would say is, thinking about the investment landscape, the regulatory part and the legislation is a huge part of it. So one of the way I always kind of get excited is just thinking about the ways to make money. And right now, I think one of the best opportunities is coming partly from the changes in legislation that we're expecting. So, there's always winners and losers. One of the winners that we think is going to be, big is going to be really a lot of the digital and growth companies that were sort of Series B to Series E that have been growing consistently, been serving the digital market, are generating significant cash flow, but have been starved of growth capital for the past few years. And that's tech in general, but it also, very acutely is crypto. So you can think of, exchanges or, other infrastructure type companies that, quite frankly, could be very, very attractive here that may then also look to IPO. But you wouldn't have thought about IPO, a digital company IPOing in the US, 6 months ago. Now that's, there's a lot of talk about that. There are some that have already, made statements that they intend to do that. So if you think about kind of like where the ball is going, that's one of the biggest opportunity sets that we see that we're positioning for. But the legislation is important because it changes everything. And a lot of sectors don't have this much volatility in legislation or regulation, but that's the opportunity. And I could talk more about it, but I think the implication of a more inviting regulatory environment, a more inviting legislative environment where there can be clarity, where legal expenses or quite frankly even just like risks of ruin are very different, makes it a much more investable kind of asset class for digital broadly, and that's thanks a lot to Stand With Crypto and all the people who basically helped kind of change the sort of leaders in a way to focus a little bit more on this sector and realize how good it could be.
Yeah, I completely agree. And I think it boils down to the fact that innovation has been stifled in the US for so long because of a very antagonistic regime at the SEC. And so I think what I'm personally really excited about is allowing entrepreneurs and founders to finally start building the products that they've been dreaming of building without having to leave the country, right? And then having that talent flight. I mean, that's devastating to not just the U.S. economy, but to families and to businesses. You were talking about making markets earlier, and at Spaceport and for Cultura, we're at the intersection of blockchain, AI, and intellectual property legislation. So all three of which have significant tailwinds and significant challenges right now. And so what I am very hopeful for is that as these Venn diagrams start to close on each other, that we're going to end up with a very favorable environment where public companies are going to be able to hold tokens on their balance sheets. And they're going to be engaging and holding tokens not because they're trying to speculate, but because they're trying to invest in their future. They're using tokens for a use case to build their business, to grow their market. And I think we have a ways to go there, obviously. But over the last few months, we've taken the first steps towards a very optimistic future.
Yeah, lots to say here. I think, like for us being both an AI company and a Web3 company, we faced a little more challenges than just Web3. At least like through our fundraise process, like we were lucky to be in the conditions that we were last year, at least like later last year. But now we're kind of entering this, token economy of AI and AI infrastructure. But then we also have to face these challenges of AI regulation. And we're like an open source project, so there's like a lot of interesting things that we'll see in the future. It's not a huge problem now, but right now, like we're with the Web3 community, a lot of those issues. I think the macro is very nasty right now. I think folks are losing a bit of hope in the space. Don't lose hope. I've been through a handful of cycles, and this is just business as usual. I think there's just still a lot of gray space on how regulation ends up shaping. And it's created, there's a lot of macro that's created a lot of business uncertainty and kind of, money's just kind of sitting on the sidelines waiting to, jump back into the market. But, for us, we're very excited about what's happening. Like just the fact that there's Stand with Crypto and there's a lot of folks lobbying, but also just organizing events in DC. Like I see that there's an immense new energy that we have not had this whole time we've been doing crypto. That is absolutely going to change how all this stuff works. I previously was at JP Morgan working on blockchain. We were doing fork of Ethereum for banks. And what we have not seen yet that everyone, tends to continue to talk shit on Ethereum. We have not seen mainstream adoption of blockchain use cases. And then like, I think a lot of institutions are just on pause right now until like there's actually clarity to bring like, the Ernst & Youngs, the JP Morgans, the Bank Santanders, the, Societe Generale, like, to bring all these financial services into this space. We have not touched it yet. The market, sorry, rambling. The market right now is like $2 trillion of crypto. It was $4 trillion at the peak, this last few months. That is peanuts compared to capital markets and to the actual value in the financial world. So we are just getting started. I don't think people should lose hope. It's just too early.
So I would say there's a mix of positive sentiment, and I think in the bubble of crypto Twitter, the world is going to end. I would say we'd love to hear a little bit more on what other challenges do you foresee, specifically maybe on the investment side, that we have to be on the lookout for the remaining of the year.
I think on the investment side, investing in digital is always tricky because you just have, extra risks and lack of, let's call it, efficient processes for investing. So like, then I'm particularly talking about tokens. When you're investing in public equities, which is, we do traffic in quite a bit. There's a lot of Bitcoin miners, there's, Coinbase, there's all the ETPs. Those are all really easy. But then when you start getting into the top, 400 tokens, you start dealing with, where you're going to custody it. If you're going to do anything that's DeFi related, you got to be worried about like how you're going to, have controls on your wallets and approval processes, things that basically TradFi don't have to deal with. So right now, starting investment funds in digital is hard and expensive. Sort of to the point about E&Y, like, we do have E&Y as our auditor, but it's expensive and they're excellent, but not everybody's going to be able to either afford or be able to, quite frankly, have E&Y accept them to be, as one of their clients. So you kind of have, this sort of, because of the environment, a situation where, investing is expensive. that's an advantage for us right now. But I don't, I want the pie to grow, and we do want good competitors to come into the sector so that we can have investors also commit capital. So it's, there are challenges that like exist moment in time. It's going to take some time to fix. But kind of maybe taking just going just on that same topic about legislation and regulation. So one of the projects that we love that's been doing well is called Hyperliquid, and that's like a great example of a unforced error by the U.S. Right. So here are some guys that were like high frequency traders, really strong business builders, who moved their business offshore and now have one of the most the most widely used decentralized exchange in the course of 6 months. I think they've traded over $1 trillion on their platform. Are starting to compete with Binance and with Bybit, two of the largest exchanges. Literally, there are multiples bigger than Coinbase, and it's all offshore. And that protocol makes $1 to $3 million a day. So call it like 500 million to 750, and is growing. So our legislative environment kept a company like that actually decided to be offshore. Could have easily been onshore. But maybe now, as things change, they'll, consider and maybe want to come onshore. So I think that's, when I look at kind of the, maybe less about kind of the just difficulties of investments, I get bummed out when I see that. I'm still investing in them because I'm psyched on the product, and we think that they're going to keep growing. But it's kind of like back to the sort of when the internet was made, a lot of the regulations in Europe were actually quite were not very supportive for internet and early stage growth. So when you kind of now look, the Mag, like where is the Mag 7 based? And that has a lot to do with the fact that many of those companies actually decided to be built in the United States. So regardless of what the kind of current situation is, the best thing about it is the sector's going to have a very, very different landscape, which means the next 5 years going to grow. I do want to take one sort of couple comments. The size of the crypto market is a couple trillion, but that actually starts to make it into the big leagues in a lot of asset classes. So like some of the more private sectors, like the entire high yield loan market, which is a pretty big over the counter market. Depending on how you measure it, it's probably 3 to 4 trillion. So it's actually not that much bigger than the size of the entire. So crypto market's actually starting to show up. The size of the U.S. Equity markets, I believe, are about 50 trillion, give or take. So like you're starting to get you're showing up. I mean, it's still small, so fair enough point, but it's actually showing up. Which when you think about like asset allocators, pensions, sovereign wealth, et cetera, it's very difficult to have an asset class be quite big and not actually have some exposure to it. Now, some of this also happened in the last 2 years, so it hasn't had time to kind of get there. But that's one of the things I'm excited about too. Is the capital allocations will come, and we don't have to just dream that this is going to grow. I think it has all the right components to do it now. So the next 2 to 5 years should be really good.
And then Lee and Matt, in operating your businesses, obviously, what other challenges or have you come across or foresee coming across beyond sort of this positive energy from a regulatory environment?
I mean, lots of jobs. I live
People.
a person and everyone's on AI right now.
Yeah, like I would say like so early last year, like we were starting to raise. We closed our round, but like a lot of the AI bets in Web3 like were made actually some months prior. And so we had the meta going for us, and it was amazing. It was really easy to have conversations with PCs, but there was like two major things. One, like they already made their beds, and two, they were kind of still like not clear how the space would map out perfectly. There were some VCs who like really understood kind of how the ecosystem was scoped out, the difference between deepen and deepen like inference, agents, agent frameworks, agent meme tokens. We were getting bucketed in all these categories that we were absolutely not a part of, and so it's very hard for us to like start to educate the narrative. So it's kind of building the wheel while teaching people how to use the wheel. So we're now at a point where folks have started to understand how that works a little bit better. So that's no longer our biggest challenge. We're also done technically raising, so we're like we're okay. We're going to our next phase of things with the Republic actually, and so there's a whole nother set of challenges by building a token economy where we have to start thinking about how you go from a project to an ecosystem, and then with the kind of unclear climate, it's very tough as a business to kind of think to take that leap. And there's all kinds of other things that go on with like operating a company, like team management. We're like thinking through how do we build agents that take over a lot of positions. So there's some like interesting things we're thinking through. I love humans, but I would love to automate a lot of their processes. But yeah, regulatory. We're not facing too much regulatory right now. It's not like I did more regulatory stuff when I was at Consensus, but not here.
Lee, anything?
Well, yeah, you brought up fundraising. So, I mean, fundraising, yeah, it's always fun, right? And I think that right now, we were talking about regulatory. I still think that is a challenge when it comes to operations execution because we don't have any clear-cut rules. We're on the path to clear-cut rules, and task force is working on a set of guidelines for potential safe harbor. Joe mentioned earlier I think you were referring to the DMCA bill, right? In 1998, that's basically what enabled internet companies today to operate freely. For those of you who don't know, the bill basically gave safe harbor to internet companies in case their users upload infringing content, right? And without that, you could go and sue Google for listing some website that you had uploaded. And that enabled Silicon Valley to really, really flourish and bloom. And we need that set of safe harbor guidelines for crypto companies in the US. We need a set of safe harbor guidelines for AI. And that is a huge, hairy problem right now. And that relates to intellectual property as well, which is the root of all innovation, which is it's human creativity, it's patents, it's copyrights, trademarks. How do we build new blockchain and AI companies within this old framework for intellectual property that we're still used to? And so all three of these areas need to get flushed out. And again, providing safe harbor, providing clear guidelines is what will enable entrepreneurs to build and innovate in the greatest country in the world, the United States.
Now, I like asking the challenge questions specifically for founders because I think at many conferences we highlight and amplify the big raises, the splashy sort of announcement. And I don't think we talk enough about what it takes to build and operate a company. So thanks for that insight. And I think it's just helpful for everyone, not only just investors, but other founders that are here. As we wrap up towards our last question, get ready with any questions that you may have. I would say, can we talk a little bit about non-consensus views for 2025, AKA hot takes? I'll leave it open-ended. I won't want to put you in against the wall, but go ahead and shoot your shot there.
Anyway, I'll give a hot take that's not that hot. It's sexy, but not that hot. So I think myself and a lot of colleagues in the space, we're going to have more AI agents than humans on Earth or on the internet in the next 1 to 2 years. So if you have 7 to 8 billion entities that can self-execute or do any intents that you can do with a Web3 wallet, what does that mean for us? How do these agents inherit identity, reputation systems? What does their behavior look like? They're not humans. They don't go to the club. They don't pay rent. They don't eat cheeseburgers. But they do need to pay for server costs, inference, compute. And so they are going to have to coordinate resources, and they're going to want to gain reputation to get access to get deeper permissioning into these systems and perhaps be rewarded in more reputation. And so there's this really interesting paradigm where these entities become more of a collective knowledge system or collective intelligence than like an AGI because of the primitives we have in Web3 that enable them to be a little more autonomous. It's less likely that an agent goes into a Wells Fargo branch and opens a bank account without a human in the loop, but they can for sure open like hundreds of wallets in like a couple hours. So my hot take is that we will have more agents than humans on the internet, and they will be the biggest users of Web3.
Took my hot take. It was a variant of that, which is at the end of this year, over 99.9% of the content on the internet will be AI generated by these AI agents. And I guess the bigger hot take here is that that's going to be amazing because human creativity is going to become even more of a scarce asset and will become one of the largest asset classes in the planet because you need a way to start differentiating between all of these commoditized products and services that AI is creating. You see this with every single technological revolution, right? The agricultural revolution, industrial revolution. At the end of the day, technology disrupts labor. It just happened to be physical labor in the past, and now for the first time, we're starting to disrupt creative labor. And every time labor is disrupted, more and more products and services enter the market. Margins get compressed, right? And you start seeing commodification. You start having a million different manufacturers creating the same white sneaker. That's when human creativity, copyrights, trademarks, characters, stories, the films that we grew up with, the Pokemon that's on my shirt, that's when it starts to differentiate between commodities. Why do you buy a Nike shoe instead of the same white sneaker with the same performance at 2x the cost? Because of the Nike brand. And so my hot take is human creativity will become even more valuable after AI dominates.
So I'll do a maybe a little one that's going to be tied to AI ultimately, but is I think stable coins, which I think is really the first true global use case for digital that's being embraced, will become one of the top 10 holders of U.S. government debt within the next 2 years. And what you might not know is that right now it's already 210 billion or so in stablecoin issuance, which makes it in the top 20. So more U.S. government debt is held by stablecoins than Germany owns of U.S. government debt. So in my opinion, one of the things that I think that the administration does very much understand is this is a important, and that's probably as strategically important as anything to the U.S. is having a good buyer for that, also being able to have sort of dollar dominance. I think to put it in perspective, though, the size of which it can grow is actually massive. We know that there's roughly 29 trillion worth of U.S. government debt. The size of the money market funds by themselves is about 7 trillion. So I think stablecoins are going to quickly, sort of compete with that in the next 5 to 10 and become kind of the dominant point. AI agents, I think, are going to be a big part of that because AI agents will like talking software to, other software, which is what stablecoins really allow for wallet usage there. So that's one of the things we'll see legislation on probably in the next 3 to 6 months is my guess. That then will I think be one of the biggest sectors obviously that grows in digital and probably bring a lot of other things with it and hopefully be useful for things like for AI use cases.
And then I would say mine is, there's more of a view. I truly believe that, again, we're very bullish on emerging markets, the global south, specifically Latin America. And I would say we have about over 30 unicorns already in Latin America. And I'll give an analogy that the same impact that that PayPal had to Silicon Valley in creating and minting new sort of millionaires. They went off to build new unicorns. That trained a whole sort of generation of entrepreneurs to go and build scalable businesses, learn how to raise venture capital. The same thing is happening in Latin America. And I foresee, those 35 unicorns training sort of a workforce of amazing entrepreneurs and top technical talent to go off and sort of build their own sort of scalable businesses, learn how to raise venture capital. And I would say I foresee sort of a lot of amazing companies coming out of not just the region, but also other emerging markets like the Global South. So that is my sort of, I would say, take and insight. And we're very bullish as a firm in emerging markets, specifically Latin America. With that said, thank you guys for the conversation. Thank you for your insight. I would say I am actually in sort of that line of emerging markets. I will be going to Argentina. I'm really happy that Dev Connect is happening this year in Latin America, in Buenos Aires, Argentina. And there is a big movement that was born out of Argentina that we're going to help. We signed up as a partner to help them sort of grow across Mexico, Colombia, Brazil, and just in general, LATAM. And then if you could help me move to the next slide, we'll be going to Argentina this week to speak on at a conference. We'll do that later. But with that said, just in general, thank you guys for the conversation. And let's continue doing this.